Hey everyone, welcome back to Upside Down Data. Today I want to talk a little bit about ADA and where we might be able to go with this rally that we're currently seeing. So the crypto market is rallying, Bitcoin is doing quite well today. You know, the CPI print, the inflation data came out this morning as expected, and the market has so far taken that positively. The stock market is up, Bitcoin is up, and ADA is up as well. ADA has been putting in a nice bounce here so far recently. We're up about 40-ish% from the local lows down here. And I think the questions for anyone watching ADA is, can we continue to go further? And what might this mean from a broader perspective? So let's talk about this rally, currently one that we're seeing right now, a little bit more. So the first thing I want to talk about is just some technicals. If we look at the volume profile, at basically the price level at which the majority of volume has transacted. So this is basically a histogram, and the bars are indicating how much of the volume in this range that we're seeing here was transacted at different price levels. And what this helps you do is identify possible places where people will have their cost basis, where they bought. Basically, if a lot of ADA traded hands, changed hands in this period, that means there might still be a decent number of people who are still holding ADA that they bought up here at around, for example, the 50-cent range. And what can happen is that as price rallies into those cost bases, people will take that as an opportunity to exit and recoup their investment. If I bought in at 50 cents, saw it fall all the way down to 24, and then see it rally back up to 50 cents, I might just sell there, get my investment back, and just not risk it falling again. So cost bases can act as resistance. And so what we're seeing is that ADA is moving up into growing potential for cost basis, growing potential resistance. And really, if we hit this 40-cent range, then especially this kind of 46 to 50-cent range, somewhere in here might offer strong resistance to ADA. A push above it could be quite bullish, because then we have clear skies, you can see up above that. But it's probably going to be a difficult battle to do that. So I'm personally going to be watching first this kind of 40-cent level, and then really this 50-cent level to see what ADA is able to do. And I think if broader markets remain bullish for long enough, I think it's very reasonable to think that ADA could push its way up here. But then it'll be watching how it reacts to those price levels closely. If it looks like it's getting rejected, if it looks like it's rolling over, that might mean that it's going to come down and have to chop around, if not go lower after that. If we can more decisively break through it, then we could actually start targeting some of these higher levels here that might start offering resistance. But that's getting ahead of ourselves. We first need to see if ADA can make it through these levels. But so far, I think there's clear skies up until those levels. So if the markets stay bullish, I think it's reasonable to expect ADA could creep its way up there. I think it's a very plausible scenario. So that's a thought on that current rally. I want to talk a bit about some of our models that we have here at Upside Down Data to get their perspective on ADA's recent price action and where they think it might be going in a more macro perspective. So I want to start off with a long-term UDPI. This is the upside downside potential indicator. It's our risk model that we have here on the channel. So basically higher values mean higher risk, and that tends to happen at these topping out points. Lower values mean lower risk, tends to happen at these bottoming out periods. And this is just the price of ADA color-coded to the UDPI level. So you can see it's done a great job in its history of identifying these high risk zones where distribution has been advantageous, as well as these green zones where acquiring ADA has generally been advantageous. And we can see, if we just flip over to the raw levels here, that we went up back in the bull run in 21, and then again up over here in the fall of 21, getting up to these high risk levels, 5 here, 3 here. I should note this is the long-term version of the UDPI, so this is more macro in its focus, cares what moves to play over months to multiple months. And really, once we hit those high risk levels, especially this one here, it was pretty much then just down only kind of ever since we put in that all-time high. And then risk has slowly kind of been bleeding down to the downside as well, with a little bit of fluctuation. But we've now meandered down to a level that's similar to where we were in the lows back here from 2019, this kind of range that we put in all the way through to about 2020, where we put in the ultimate low during the March 2020 crash before going on the bull run. We're getting down into that same general area. So I'm not going to call a bottom. I don't believe in calling bottoms. I think it's still way too premature to say, oh, that's it, this is the bottom for ADA. But what I will say is that we're getting down towards those levels that historically has indicated kind of the worst being over in the bear market. And so if you're looking at ADA and thinking about the long-term risk reward, if the past is any indication of the future, this model thinks that we're getting into a decent value zone for ADA right now. Now, there's no guarantees that this will play out exactly the same. You know, if the stock market has a massive crash, if some horrible additional thing happens in the crypto market, like another FTX type situation, then all bets are off and we could easily go way lower. But if those things don't happen, and especially if broader markets kind of remain more bullish, I think it's very possible that we see a decent early rally here, kind of what we were just talking about, and that might serve to start building in this kind of a bottom formation where we might still have to chop sideways and the ultimate bottom might still be in the future, but kind of setting up that base, that accumulation range that we can then move out of in the next bull market. So too early to say that definitively, but certainly it looks like we're a heck of a lot closer to that now than we were somewhere back here when the bear market was very much in full swing, but yet we were still, way all the way up here at, -1, -2, not anywhere close to these levels that have in the past indicated bottoms of bear markets. So more realistic upside than downside potential in the longer term, but of course there's no guarantee that that's going to happen anytime immediately. We might have to spend time like we did back here building a base before moving forward. So you can see some short-term volatility like we have in the past, but I still think we have a lot to do, or a lot more time that probably is going to need to pass the wounds to heal from FTX and everything like that before crypto markets and ADA can really start making more decisive rallies, bull runs to the upside. Just my thoughts on that, obviously not financial advice. I also wanted to show the short-term UDPI. So this is another version of the risk model that cares about moves that play out over days to weeks, so shorter term in its focus. And this basically is just more reactive to those moves. And what I wanted to look at here was, it's been reacting quite decently to this move that we've seen so far. But you'll notice that we're still below this kind of level at around 0, which has acted as resistance for the short-term UDPI multiple times in the past, marking these local tops. And we're definitely below 2, which was acted as resistance for this kind of the largest bear market rally we've seen so far for ADA back towards the beginning of 2022. So these are the kind of the levels I'm watching for the short-term UDPI. Is can we clear above 0, in which case then I might start targeting a level closer to up here. So we still have room to go before we hit 0, so that would suggest that more short-term upside is possible. If we bump our head up here, that might just be that the rally is a little bit shorter in its life. It might be something more like this rally or even part of this rally and then roll over. We see something more like this. What I think is notable is that we're starting from a lower base point, so we might actually have more upside to go than this rally should we do that over here. And then if we get up to these kind of levels again, that's where I'd probably look at see this as likely being a topping out point. I think it's very unlikely for us to be able to get all the way up here in the middle of a bear market. I think things would have to really turn around and become way more bullish for us to even have a chance of realizing this much short-term upside potential. I think more likely we're either going to tap out at around 0 like we have back over here, or maybe closer to this range over here if we can clear above that. So that's what I'm going to be watching with the short-term UDPI, and we'll make an update if we're getting closer to those levels in the coming weeks. So just some thoughts on the current rally. Again, no, not financial advice. There's no guarantee that we even have to continue rallying. Obviously, anything can happen, but that's just what I'm looking at. If we can continue, 0 or 2. Now, the final thing I wanted to talk about here was momentum bias indicator, or MBI. So this, as the name suggests, is a momentum indicator, quantifies if the momentum is prevailing to the upside and pulling price up, or prevailing to the downside and pulling price down. And so what I've talked about before with the MBI is that bear markets are categorized by this exact behavior we've seen over here, where you spend a lot of time in the red, try to reestablish positive momentum bias, but then fail, get rejected to the downside, see new lows come, maybe try to reestablish it again, fail, new lows come, and you'll see that we're right now just about to try to pop back up into the positive zone here, into the positive numbers. And what I'm going to be looking at quite closely with ADA is, can we start to put in the behavior like we did over here, where we came out of a bear market, we went up and then started spending some time kind of oscillating around 0 and kind of more or less throughout this entire accumulation zone, kind of staying in a general kind of range, fluctuating around 0 and not spending, exceeding long times in one direction or the other, or going exceedingly too far in one direction or the other. Because that is the kind of behavior on the MBI that tends to categorize these transitions between bear markets and then going into bull markets, this oscillation around 0. And so what I'd like to see ADA do here is be able to get not just a little bit above, but decently above zero, and then start that kind of oscillation pattern going out into the future, kind of going up, down, you know, so on and so forth. Because that would then maybe mean that even if price does go into set an ultimate new low, we're not getting into these regimes of just oppressive downside momentum bias that keeps dragging price down. That we're getting into more of an accumulation zone and can set the stage for these explosion times where you get this massive sustained positive momentum bias that really catapults price upwards. And so that's what I'm going to be looking at, because across assets, every asset that you'll look at with the NBI, they'll show this type of behavior in those transitions. This is very characteristic of this kind of behavior happening in the transition coming off of these bear market situations. And so that one might just be one other data point to kind of consider when thinking about whether or not the bottom might be forming. If we just go up and then get rejected again, come back down, then I think the bottom is probably not in for ADA, and we might just continue going down further in the bear market. But if we get up and we start oscillating around zero, like we did, you know, kind of back here, then I think the possibility of us setting this kind of a stage is very much there. And so something that would certainly help us do that is if we can go on a decent early rally here. I think that would help us to start being able to, at least for the short term, getting a positive momentum bias established, and then hopefully set the stage for that kind of behavior going forward. So still way too early to know if that's going to play out, but something I'm going to be watching very closely. And if it does, then that's something that we can look at as a point for the bulls to suggest that maybe the bottom is either in or near. So too early, but something to watch. So to kind of wrap up my thinking about ADA, I think that ADA is going to be an interesting asset to watch going forward. You know, it's already done well off the lows here. You know, there's some resistance that it might come into kind of coming up on this rally, but if it can do decently on this rally, and it doesn't have to go that far, right? It doesn't have to be super insane, jetting off to these, you know, plus over $1 levels or anything like that. Just a decent show of strength here could go a long way to start really kind of turning the market around, especially if we can start, you know, doing things like turning the MBI more bullish and some of those indications. So those are some things that I'm going to be watching for. You know, again, I'm going to be watching the 40 cent and the 50 cent levels really closely if this rally continues, then also checking things like the short-term UDPI, and then the more macro perspective, watching things like the long-term UDPI and the MBI. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. A lot of updates, better indicators, and more over there.